Hello and good morning, everybody. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's market outlook, the European session market outlook. Starting with the US markets, the Nasdaq traded with 40 points range and ended yesterday's session at a pretty much near the opening price. It found support with the 50-day moving average, so the bulls are showing some positive signs in the short term. We are anticipating a slight correction to the upside for today's trade later on. The Dow has traded with pretty much the same behavior, with about 15 pips range, and again supported by the 50 moving average, with anticipation of an uptrend movement in the short term. The commodity trading S&P 500 moved with the same behavior with its bear traders, with almost 20 pips range, ended on a contraction, and we do expect a positive candles in the near term for today. All of this is based on the weaker than expected data which came out from the US yesterday. European markets, the unemployment in Germany and all over the Eurozone, along with the CPI inflation data, lower than expected outcome, has moved the Euro main markets just a bit, starting with the German DAX, which has made over 100 points range, but the battle has settled near to its open price. A positive reaction is what we see for the near-term trade on the German index. The French CAC 40 gained almost 40 pips yesterday after 80 pips range, and it's still looking to go north today. Moving on to the British main markets, the FTSE has lost some of its momentum with almost 30 points decline after mixed data yesterday, even though the gross domestic product estimation showed slight improvement. The markets were down as the foreign investments outlook has declined for the year. Year-to-year basis, the pound has made a 120 pips range against the US dollar and placed a bit of a pressure there. The same goes for all major pound rivals. Asian markets, starting with the Chinese PMI, which showed some contraction, which has affected the Asian Pacific main markets with a bit of a downside movement, and also the Japanese Tankan manufacturing data came out in a mixed outlook, supporting the large manufacturers, but showed decline in the services sector. The slump is also supported by the unrest in Hong Kong and also a one-week bank holiday in China. Moving on to commodities. After the flooded markets and stronger dollar and the lower demand for the WTI crude oil, we have seen the biggest slump in the price for a very long period of time. The range was $4. And it ended last trading session with almost $3 decline per barrel. We would be looking at a slight correction to the price today, but obviously the oil stays in its downtrend channel, and we will wait for some time to see it make its way up. We were looking at, by the way, a double bottom formation on the daily chart. But then again, we need to wait for quite a while for the confirmation of our entry point there. The stock change inventories is coming out today in the calendar. Gold, the gold has almost touched the $1,200 per troy ounce, as per the ICE dollar index or the Dixie, which has shown quite some positive sign. Reaching almost 86 points yesterday, which was a 7.7% quarterly gain, which has last seen at year 2008. The pressure on the yellow metal remains bearish in the short term. Silver follows gold with 4-year low and a 60 cents decline to its price. We are anticipating a short correction to its price up in the short term. No drastic movement in the natural gas prices. We are anticipating a correction to the downside in the near future. Something important on the commodities market is the fact or the news that we're spreading around the medias. The US government is looking to boost its oil and gas exports in order to fill in the niche left from the geopolitical events over the last year or two. Today in the calendar, we are expecting manufacturing data coming out all over Europe, US, and the British economy. Also, foreign investments in bonds and stocks in Japan. In summary, the dollar is adding strength, it's adding power. The UK economy outlook is looking very well. So we should be looking at all those interest rate decisions in the short term. That is pretty much all from me from today. Thank you very much for your time. Cheers and have a successful day in trading. Bye-bye.